Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vivek Iyer. The Nifty at 11 o'clock has dipped below the 23,300 mark, 40 points lower. The Sensex is shed 150 points. Midcap index is holding up in the green by close to about a third of a percentage point. But even as we've come off from the highs, you would still say markets are consolidating. It's largely sideways. But Asia is firmly lower today. If you pull out the Hang Seng, that's down close to about 2.5%. You've got the Chinese markets down close to about 1%. But even the others, the Taiwanese markets, the Nikkei market, both those indices are down over 1%. The Kospi is down close to about 0.8%. And escalating trade tensions between US and China have rattled sentiment. Just, take a look at the recent headlines that have come through, right? Beijing has suspended Boeing's jet deliveries. Nvidia share price was down in after-hours trade because of the export restrictions of their chips to, China. So these curbs are hurting both sides. UBS has brought down the GDP forecast for China to 3.4% for this year, 3% for 2026. And now analysts are pointing out that, it just seems like with this kind of pressure, a resolution has to happen. Like Boeing perhaps is now pressurizing White House. The technology majors, like Nvidia, for instance, could pressure White House and strike a deal now. So analysts are hopeful that, it's like, there is a storm and then there is a lull, right? Right? So perhaps this time all this news flow is just escalating and then you're going to it paves the way for some sort of a resolution. Even China has appointed new top international trade negotiators amidst all this trade standoff, according to CNBC. So perhaps hope.
Some hope, and equity markets, still trying to digest all of that. Wave of profit booking seen across Asia, like you just pointed out. Indian markets largely sideways. What's clearly standing out as far as Indian markets are concerned has been the Bank Nifty. Last 3 to 4 trading sessions, it's been the clear outperformer, and today that particular outperformance has continued. What's doing very well for the Bank Nifty? Well, IndusInd Bank, the important flow coming in as far as the audit was concerned, is seen quite positively by the street. That stock high by almost 5%. And another stock that's doing quite well is Bandhan, Axis, PNB, all of these stocks gaining on the back of TD rate cuts that a lot of the banks are taking. What is actually seeing a bit of profit booking is actually the entire metal pack. In fact, just a while ago, if you saw most of the metals, they saw significant selling pressure come about in the last hour. Hindalco, JSW Steel, Nalco amongst the top laggards. Earnings reaction, well, IREDA, that particular stock yesterday went higher significantly. Today was at one point of time almost 12% higher, but cooled off from the day's highest points. ICICI Pru Life and ICICI Lombard, two seeing reactions as far as results are concerned. Lombard down over 1%. And the auto ancillaries yesterday, which were clear outperformers, today taking a bit of a breather. Bharat Forge, Samvardhana, Sona, BLW, all of them slightly lower in the session. And MGL, IGL, and Gujarat Gas, all three of the CGDs, it's a negative surprise that's come about for them in terms of further deallocation or further reduction as far as APM gas price is concerned. And on the back of that, MGL taking the majority of the hit, almost 5% lower today, Reema.
Okay, but let's talk about IndusInd Bank. Yesterday, up 6%. It's followed it up with another 5% up move. So in 2 days, IndusInd Bank, his share price has surged close to about 11%. The company has reported that an external audit has found a 1,979 crore rupee reduction in the bank's net worth due to derivative discrepancies. Ritu is joining in with all the details on this and what brokerages are saying. Ritu.
Well, a top-level shakeup could be on the cards at IndusInd Bank, with sources indicating at least 3 senior-level exits expected in the coming few months. Now, we've been given to understand that the CEO, along with the deputy CEO who is in charge of global markets, including the derivatives portfolio, are among the 3 executives that could be asked to step down because the regulator has expressed displeasure at the manner in which the entire issue was handled and the delay in disclosures. Now, while the board is already working on the CEO succession plan, we've also been given to understand that the regulator has asked the bank to submit the shortlisted candidates at least 4 to 6 months before the current CEO Sumant Katpalia's term ends in March next year. However, in its response to our story, the bank has denied receiving any such communication and did not comment on the management changes. Now, the bank has also received the external auditor PwC's report on the derivatives portfolio, which pegs the hit at 1,979 crores, which is broadly in line with the management's estimates as well as the street expectations. And we understand also around the regulator's preliminary assessment of the hit. Now, the bank had first pegged the adverse impact at 2.35% of its December net worth, which it has now revised down to 2.27% on a post-tax basis and will reflect it in its FY25 financials. So no nasty surprises on the financial front. Brokerages like Morgan Stanley say they will closely monitor the upcoming earnings for insights into the outlook on margin growth and asset quality. Macquarie sees this as incrementally positive in the near term, while Citi says developments around the CEO transition will be closely monitored.
Thank you very much for that. Gensol Engineering shares tank after the market regulator SEBI passed an interim order against the firm and its promoters over alleged fund diversion and false disclosures. Yash is here with the details.
Well, it's an interim order from market regulator SEBI against Gensol Engineering and its promoters. The sad part, of course, is that the stock has lost about 90% of its value in the last 1 year, and the order comes right now. There's more investigation which is to be done, but as far as the interim order is concerned, what market regulator SEBI has said in this order is that there will be a forensic audit, which will be done in the books of Gensol Engineering. The auditor will be appointed and will submit its report. As far as, time period of 6 months from the date of appointment is concerned, Gensol Engineering, Anmol Singh and Puneet Singh Jaggi, the promoters of the company, will be restrained from buying, selling and dealing in securities market directly or indirectly. Anmol Singh Jaggi and Puneet Singh Jaggi will be restrained from holding any position of KMP or director as far as Gensol Engineering is concerned. Very, very serious allegations as far as the interim order itself is concerned. The first allegation is about unaccounted money which was raised from companies like IREDA, PFC, and that money being either round-tripped into the private entities of the promoters or being given to their family members or being used for personal uses like buying high-end real estate, paying credit card bills, taking foreign trips, buying golf sets and things like that. SEBI has, of course, compiled all these allegations. There are allegations around market manipulation in which private entities of the promoters would frequently trade into the listed entity of Gensol Engineering. There is also, an instance which market regulator highlights about how the money which left Gensol Engineering, the listed entity, into a private entity, into the promoters, into again a private entity to come back to be invested into the preferential issue of Gensol Engineering. Technically, the money leaving Gensol and coming back into Gensol in the name of other private entities. Series of these, violations being highlighted by market regulator SEBI, and hence this order, but an interim order. There will be more investigations which will be done, and we don't know what more, will come out, how much more dirt will come out of this particular issue as the investigations continue.
Thank you so much, Yash, for joining us and shedding light as far as the events that are transpiring at Gensol Engineering. Well, it's now time for a short break. We'll get you more on the markets on the other side. Remember, we'll also be joined by Gauri Kirloskar, the Managing Director of Kirloskar Oil Engines, to discuss the recent Defence Ministry order worth 270 crore rupees.
Welcome back. Let's talk commodities now. Manisha Gupta is now joining in, and she's talking about the plummeting crude prices. Manisha, what's happening?
Oh, well, yes, it's as gold makes all-time highs, we've seen other commodities actually take it a bit on the lower side there. There are concerns about the international trade and tariffs, and that's weighing onto the markets. For the crude oil prices, with the kind of decline that we are dealing with right now, we are heading very close to those 4-year lows yet again. Well, to begin with, there are oversupply concerns. Markets are looking at high production from Canada and in US as well. The only place that where the production has actually seen a bit of a decline has been Saudi Arabia. Their production has declined to below 10, even below 9 million barrels per day at this point in time. Well, the major hit also comes in after the EIA report suggests that they're looking at a lower demand growth forecast for the year 2025, and it's the lowest pace that you are seeing in last 5 years as well. Apart from that, the OPEC and allies allies will also be increasing production from the month of May to the tune of 411,000 barrels per day. So you are looking at more supplies, not so strong growth in sense of demand, and that has led to excess situation into the international markets there. To add to that, the US inventory data that came in yesterday also shows yet another and a fourth straight week of a build-up in US inventories, and that's weighing onto the markets too. Well, to watch out for the day today is going to be the US Fed Chair Powell's speech, and apart from that, the US retail sales data that would give an immediate impact on the US dollar index and an impact also on the crude oil prices.
Thank you so much, Manisha, for joining in and talking to us about what exactly is transpiring and happening in the crude oil markets. But moving on, like promised, remember Kirloskar Oil Engines recently bagged a Defense Ministry order for 270 crore on April 2nd. The company is set to design and develop in-house speed engines scalable from 3 megawatt to 10 megawatts. To discuss this, we are joined by Gauri Kirloskar, MD of Kirloskar Oil Engines. Thank you so much, Gauri, for joining us. First up, take us through the contours of this particular order win, the total timelines, what exactly you will be delivering, and is this the start of further order wins? Is this just a prototype that you're developing for the defense services at this point of time?
Yeah, thank you very much. Thanks for having me on the show. It's a very exciting order for us, and at this point of time, it is an order for a prototype development. But if we develop this order and this engine and deliver this engine successfully, then it opens up further opportunities with the Indian Navy to develop engines for future projects as well.
What is the exact scope of work that you are doing for the Navy? We typically understand that you are in the genset business. So we understand that this particular development is a slight shift away from what essentially Kirloskar Oil Engine developed. And along with that, what is the kind of experience that you have in this particular segment?
Great question. So yeah, this project is to develop a 6 megawatt engine, and that's for marine main propulsion of Navy ships. And this is where the project is really exciting for us, because it's also a great initiative from the government to encourage R&D in India. Historically, our R&D spend as a country is significantly lower in comparison to most developed countries, and the government has been focusing on increasing that spend. And of course, industry has a role to play in that. And we at KOEL are very proud to say that we have developed our entire engine portfolio in-house, and the focus on R&D has always been there in the DNA of the organization since inception. So through this project, we will be not only responsible for just manufacturing the engine, but also designing and developing it in India, which means we will own the technology rights of the engine as a country, and that is extremely significant. When you talked about, what is our experience in developing these sorts of engines, I do want to say that this is not the first time that we are executing projects at this scale. We have in the past also executed projects as large as this. In fact, more than 250 of these kinds and size of engines have been installed in various applications in India as we speak by us. And what is different in those projects against this one, though, is that in the earlier case, we had a technology collaboration with another engine company and then executed the manufacturing in India, right? But that means that the intellectual property and the technology didn't belong to us. In this current project, we will develop the technology in-house and we will hold the rights to the technology. So for us as an organization and also from the nation's priority of indigenization of technology, this is a very significant step forward.
Gauri, hi, morning. This is Rima here. Can we talk about exports? Sorry, I think exports is about 10% of your revenues. Is that correct?
Yes, that's right.
Broadly. And you would export to US and Middle East? Those are the key markets?
Those are some of the key markets. Yes, there are other markets as well, but yeah, those are some of the key markets.
Okay. And now, given all the uncertainty and what's happening with tariffs, etc., how do you expect exports to pan out? Are the orders which you had on hand, are they continuing as of now? What could export growth look like, say, for the next 2 quarters given this, or is there some pause?
So from the specific US point of view, US is strategically a very important market for us. We made some small investments there and we're looking at growing that business over the longer term. But today, since the revenue from the US part of the business is not very significant for us, I don't see a significant impact because of what's going on from the US. If you also look at the supply chain and how it would impact us as an organization, I'd say that because we develop technology in-house and we therefore are also in a unique position to make sure that our supply chains are largely localized, that's a competitive advantage for us. Like even in CPCB4 Plus, where we saw a lot of the parts becoming proprietary, our import content is still under 10%, and within that 10%, the dependence on the US is still quite marginal. So I don't see a major impact from that point at this stage. Obviously, the situation is clearly very dynamic and uncertain at this stage. We haven't seen any significant impact to demand at this point of time. But we will have to obviously wait and watch and see where the situation ends up and what impact it will have, not only from the India-US point of view, but from the global point of view.
Gauri, let's also talk about the core business itself, which is, the diesel genset business. We understand with the latest emission norms, all of the players have gone ahead and upgraded their offerings to the market, which are significantly expensive compared to, the earlier norms. So number one, what has been the market response to these latest diesel gensets? A few analysts have also raised concerns in terms of market share. We understand that the competition on ground has been much more intense. And last couple of quarters, you enjoyed some pre-buying. So going forward, what can be the steady state growth you can see in the CPCB4 norms?
Sure, yeah. So, post the CPCB4 Plus transition, as we expected, there was a general contraction in the market. And that's because of the pre-buy effect. And we saw that play out for a couple of quarters. But other than the pre-buy related demand changes, we don't at this moment, see any major changes in the market across the segments. And the demand looks as we expected in terms of the pickup. Quarter by quarter, it looks as we expected. The reason I'm being cautious in answering you is that given the general uncertainty due to President Trump's tariff announcements, we will be keeping an eye out for any changes in demand that we see. But so far, at least the domestic scenario seems okay. From a market share point of view, our market shares have remained stable through this transition. There has been some consolidation in the industry. So there have been market share movements of other players, but overall, our market shares have remained the same. When it comes to, I believe your other question was on pricing. On pricing, there has been the price increase post the CPCB4 Plus transition across the industry. And I would say that the market is still in the process of settling down on that. So the price discovery process will play out, and it will play out across sort of like a node by node level across the product range. But overall, it looks like the market has accepted the price uptick. It was, something that was expected and was talked about, obviously before the change, and the CPCB4 Plus change itself had been delayed for a year. So it was, something that was in the works. And we are not really seeing a huge change in demand, as I talked about before. What we are focusing on, though, as an organization is, a large part of the smaller nodes in the market under CPCB4 Plus are commoditized. And there has also been huge technology convergence with this emission norm change. And what I mean by that is that engine manufacturers are largely using the same technology to achieve emission requirements. So as an organization, we have been focused on creating a differentiated product range. It's called OptiPrime. And because of this differentiation, we can maybe have some pricing power.
Gauri, one last question, request you to keep your answer a little short. In terms of data centers, what has been the demand over there? We understand that there has been significant inquiries that have come in from that particular segment. What has been the growth that we're seeing over there? And overall, what can be a sort of steady state growth we can see? FY25, there has been a bit of a dip as far as operational performance is concerned.
Sure. So the data center market is, and that segment is the fastest growing segment for our industry in power gen. So if you look at, say, high horsepower growth in in Q3. Okay, I can talk about Q3 numbers. The industry in that segment actually grew at 22%. Whereas if we look at below CPC4, it contracted largely to around 40% degrowth. So that's the largest growing segment, and it's largely driven by data center demand. So this is something that we expect to continue, and it is something that we now have products ready for, and we've started catering to data centers already. We have the certifications, and it is something that we're very focused on.
Thank you very much, Gauri, for joining in. Look forward to more conversations. We need to get into a break. On the other side, market technicals with Soni Patnaik.
The iconic line from Top Gun, was there ever a moment, in that phase where you were creating this movie-going experience where your father maybe told you that, son, you're writing checks that your body can't cash?
He made me cost conscious. He made sure that I didn't spend that kind of capex, that there'll be no returns.
A lot of the scale has been driven by way of M&A and acquisitions, and of course Inox was the big one.
Yeah.
What would you say have been the non-negotiable?
I think non-negotiable right from the beginning was to stick to the fundamentals. And I was really privileged to have somebody like Renuka and Vishal Mahadevia, who's Warburg Pincus,
yeah.
and mentors like Sunil and Rajiv Singh and so many people. Fundamentals, unit level economics. So when I was doing organic growth as well, location has to be right, the rent has to be right, developer has to be good, development has to be good. That was organic. Inorganic also, am I acquiring something which is going to be value accretive or value destructive? Is it an ego, vanity acquisition, or is it something that is missing in the current portfolio and is going to add value?
Welcome back. Let's talk market technicals. Soni Patnaik from JM Financial Services is now with us on the show. Soni, after yesterday's big up move, today's sort of a quieter session. We are seeing a little bit of a flip-flop. Markets first corrected from the highs, and now it's trying to recover and get back into the green. What is your approach to trade and your stocks?
Hi, good morning, Rima. Thank you so much for having me on your show. I think this is a short, truncated week, so one can see Nifty actually in a range. If you look at the option chain for today, 23,300 straddle seems to be, adding a lot of aggressive open interest. So there's a bit of a fight between bulls and bears to take over this level for this week's expiry. So we feel that any move, if Nifty is able to cross above a 23,400 level in spot, there can be a sharp short covering by tomorrow's expiry when Nifty can head towards 23,550 to 23,600 range. Put writers are also getting aggressive. They're raising their support. So intraday basis, you can see a lot of aggressive put writers forming towards 23,200 base. That seems to be holding as a strong support. So the call is quite simple over here. I think by tomorrow, Nifty may head towards 23,500. So one can actually initiate a long strategy at current levels, keeping a stop loss of 23,200 in spot levels. And by tomorrow, there's a possibility that it heads towards 23,550 to 23,600, which can be your targets. I think that move may be seen by tomorrow, irrespective of how short it today. But for today, one can actually indulge in more of stock-specific strategies. And both these strategies should be on the longer side, considering that we are also bullish on Nifty for tomorrow. So one can initiate a buy in PFC, which is about to break its 200-day exponential moving average on daily charts. PFCs looks quite strong. One can initiate a buy at current levels with a stop loss of 415, and a target towards 450 to 470 can be seen positionally. The second buy recommendation comes in for UPL, which is also approaching a fresh breakout on daily chart. So one can buy UPL at current levels around 660, keeping a stop loss of 640, and a target of 700 plus levels can be seen.
Thank you so much, Soni, for joining us, giving us a view on the markets. as well as your individual stock-specific ideas. Well, we'll now take a short break. Up next, we'll discuss market fundamentals with Manish Dangi, CEO and founder of Mosaic Asset Management.
Welcome back. Absolutely flat on the benchmark indices. Some oil and gas stocks moving up. So ONGC's moved to the day's high. That stock is up close to about 1.8%. You've got BPCL, which is spiking up. In fact, the entire oil and gas index too will reflect that. And IndusInd Bank is piling on some more gains. It was up 4.5% at about 11 o'clock, now up close to about 5.5%. Axis Bank, though, remains another big mover, for nearly 4% up on Axis Bank. Manish Dangi from Mosaic Asset Management is now with us on the show. Manish, thank you for joining in. This is Rima here. You know, it's been extremely volatile, chaotic, confusing since the 2nd of April. So many announcements, headlines. Markets are moving up one day, down the other day. Tell us your understanding of what has transpired and how it's impacting the various asset classes.
Hi, Rima. Morning. So, of course, it's very well documented, so I don't sort of need to rerun the story of Trump tariffs. Its impact, of course, at least a glimpse of it we've seen over the last couple of weeks. Essentially, what underpins all of this is, world is disintegrating, and in a sense, this hegemony of US is in some sense unwinding. And essentially, the neoliberal setup that we've lived in last 30 years, no tariff world, Vasudhaiva Kutumbakam world, where anyone can travel to any place and can trade with anyone at low tariff. That of course is unwinding as we speak. So Goldilocks setup for trade as well as capital is actually ending. It started with Trump 101, and now, of course, it's actually accelerating. It has implications of all kinds. I think, we're going to be living in a lot more volatile times, not just in terms of asset markets, but also from the point of view of economic outlooks. Markets, risk premiums, even today, even though they've gotten corrected, specifically in the US, are not yet pricing in the new world that we're living in. I think it's much more fundamental. I've argued about this a couple of times on your show also in the past, but yeah, it's much more fundamental to how the world operates today versus any time, that we've lived in since 1990. And, in a sense, investors sort of should actually incorporate this in their view of actually how they look at markets as well. But we can discuss in detail any specific part of it. It's sort of a very abstract thesis.
But do you think the peak of the bad news is behind us? From here on, the headlines will only be a little more amenable?
Absolutely. So from the point of view of the peak news with respect to tariffs, of course, is behind us. But, what entails now is these, hard negotiations with each country. And we yet don't know in terms of, let's say, what we will get, vis-a-vis America. But I think what is still ought to unravel is, what happens to the China, because, US's entire ploy is actually to corner China. And essentially what we end up getting, Rima, is that, a lot of Chinese products which otherwise can't go to US begin to flood Asia or other countries. And in some sense, I'm afraid that, you could actually enter in a little bit of a 2015-16 Chinese deflationary setup. Crude is telling you that story, but also, some of the other commodities are telling that story. So sort of my worry is that, we may actually end up getting an inverse of COVID shock, or more like 2015-16 kind of setup, in which Chinese products actually create a lot of disinflation or deflation across Asia. That's good for bonds, bad for margins. Never forget that 2014-19, Indian earnings grew at just low single digits, 6, 7, 8%. If Chinese were to be really cornered, the implications for our corporate margins would be pretty bad, I would say.
Manish, you are now incrementally positive given the fact that you believe majority of the negative news flow coming in from tariffs is something that is behind us. Now, going forward, how are you assessing the macroeconomic situation? your view on the crude oil prices, your view on US Treasuries. Where do you see it move from here?
So again, for context, just think of crude. Crude actually has never been lower than $65 outside of big crisis in last 20 years. Briefly in 2008-9, then in 15-16, when the supply glut because of shale revolution and Chinese deflationary shock, and during COVID. So, crude itself is telling you, and crude is a good barometer of, current demand in the world. So, given that you're asking me macro, I think the global growth temperature, if you were to check through crude, it sort of certainly looks like that it's actually, it's pretty weak right now. Rest of the world was anyway struggling, but now it seems, that US's number also will begin to show sort of relatively poorer or weaker, growth numbers there. Other macros from a USD standpoint, I'm of the view, of course, that the tariffs, while at a first order it seems like a inflationary shock, it is a bigger growth shock, so to say. My sense is that both in India as well as in US, markets would be surprised by sharper rate cuts. More specifically in emerging market and even in India, I've been of the view that we are headed towards 5 handle on 10-year bonds. We've sort of come a long way. I think both US Fed and RBI will kind of sharply cut rates. Also, it's very likely that the QT ends in US and a significant amount of QE actually can begin in a couple of months' time there.
Okay. So your base case is perhaps that the global growth slows down. There is a growth shock, but is there a recession also?
So if you look at, again, a lot of us got this whole thing wrong with respect to US recession, even in 2022. So US economy has been unusually resilient. It's difficult to call this out, Rima, but if you look at most indicators, they seem to suggest that the walls are very high, so markets are not very certain. But most surveys suggest that half the fund managers think that US will enter in recession. Most of the financial condition index are suggesting that we would have actually entered in somewhat of a stress and a potentially recession. So nothing is set yet, but I'll be very surprised with such a big shock that US is experiencing right now. Its economy does not roll over. Recession, mild or hard, we don't know, but a significant slowdown for sure is likely.
So slow growth, deflation, good for bonds and bad for equities, right? In a nutshell, that would be a base case?
Pretty much.
All right. Thank you, Manish, for joining in. We'll look forward to the next one. For now, we need to slip into a very short break. On the other side, we'll come back and tell you why stocks like Tata Motors, JBM, Wipro are buzzing in trade. Stay tuned.
The ghost of 2008, which gives us all that, would never leave you. So far, it's been moving along as Trump had planned.
Yeah.
And I think the worst is behind as far as the markets are concerned.
I remember doing a show when Zomato was listing with some of your team members. So I took early calls.
This is one of the lessons I learned, I would say, early in the TMT bubble, .com bubble. In my US portfolio, I never could buy Amazon.
Okay.
Thinking that it's not making money, and at that time it was also an assessment that it can never make money. Today I often get asked, because we are very cash flow centric and there are loss-making companies in our portfolio as well. Value of any business is present value of future cash flows. It's not necessary you have to make cash flows in year 1, year 2, or even year 3.
Is the post-COVID era dream run of 3, 4, 5 years?
Certainly.
Is that over?
Post-COVID 5-year fantasy run is over. A dream run, I would call, is much longer term.
Welcome back to Trading Hour. Well, this is an exclusive from CNBC-TV18. Sources tell us that the Union government is expected to launch a legal tender for the procurement of 10,000 electric buses for 9 major cities across the country. Parikshit joins in with more details.
This could be a positive for electric bus manufacturers in the country. The Union government is set to launch a tender for procurement of 10,000 electric buses. The Ministry of Heavy Industries is likely to launch a tender in May for the procurement of buses under the PM E-Drive scheme. CESL, or the Convergence Energy Services Limited, which comes under the Ministry of Power, is likely to issue a tender to choose intra-city buses, e-bus operators for 9 cities. The centre is likely to extend a subsidy of approximately rupees 3,000 crore for procurement of electric buses. MHI has capped the maximum subsidy amount at rupees 35 lakhs per electric bus. Most states have demanded 12-metre electric buses for intra-city use. Electric buses to be procured for Bengaluru, Chennai, Hyderabad, Pune, Mumbai, Surat, Ahmedabad, New Delhi and Kolkata. The PM E-Drive scheme had envisioned support for 14,028 electric buses with a subsidy outlay of rupees 4,391 crore. The reason why the centre is going with procurement of 10,000 crore e-buses for now is because Mumbai, Kolkata and Chennai have not yet submitted their e-bus requirements. The PM E-Drive scheme was launched by government in September 2024 with an outlay of rupees 10,900 crore and is applicable till March 2026.
Okay, thank you very much for that. In terms of earnings, the big one to track today will be Wipro. Remember, TCS's numbers were soft. The company's guidance, in a way, was subdued. They spoke about how the macro environment is affecting decision-making. Tactically, they've seen some projects which are being put on hold as investors are in a bit of a wait-and-watch mode. So when it comes to Wipro, all this is likely to impact them too. So the street is working with a revenue decline on a quarter-on-quarter basis. So dollar revenue is seen down 0.5% quarter-on-quarter. In constant currency, it's a decline of 0.2%. But it's within the company's guidance of -1% to +1%. Now, because there is no top-line growth, margins could be impacted. The CNBC-TV18 poll pegs the margins at 17.1%, down 40 basis points sequentially. But the key is going to be the guidance. You know, some fear that because of the uncertainty and the lack of visibility, will the companies be in a position to give guidance? Wipro at least gives you a quarterly guidance. So maybe they have some visibility because you have deals on hand which you need to execute. But if they decide to give a guidance, then the estimates seem to be -1% to +1%. Though there are, analysts like from Nomura who expect a -1.5% to +0.5%. So a little more conservative to begin with. So don't be surprised if the company is very conservative as they give their guidance, because these are very uncertain times. Also remember, Wipro has a higher exposure to discretionary spending. They made an acquisition called Capco. It was a consulting company based out of Europe, and consulting is largely discretionary. So what the company says about discretionary demand will be watched very closely.
Thank you so much, Rima, for telling us about what exactly to watch out for as far as Wipro's results are concerned. But before we go into a short break, a small programming note for our viewers. CNBC TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for SME Champion Awards Season 2.
Welcome back. Big moves in the mid-cap arena. So just take a look at Cupid. JBM Auto is up 11.5%. Walchand Nagar has seen a big move, particularly in the last 1 hour. So that's up close to about 8 to 9%. Walchand Nagar should come up for you on your screen. Big up move. But Make My Trip Foundation, in collaboration with the World Travel and Tourism Council India, is hosting the India Travel and Tourism Sustainability Conclave. Let's cut across to the Culture and Tourism Minister Gajendra Singh Shekhawat speaking at the event.
जो डेटा उन्होंने हम सबके साथ में शेयर किया, कुछ मिश्रित भाव वो हम सबके लिए लेकर के आया। कुछ जगह ऐसी हैं जहां हमें विचार करने की आवश्यकता है, अगर ग्लोबल कंटेक्स्ट में हम बात करें। कुछ विषय ऐसे हैं जहां हम विश्व से बेहतर कर रहे हैं, शायद सह आशय नहीं कर रहे होंगे, इंटेंशनली नहीं कर रहे होंगे, लेकिन ऑर्गेनिकली वो हो रहा है, उसको और सस्टेनेबली कैसे ग्रो कर सकते हैं, उस पर हम सबको काम करने की आवश्यकता है। और मैं अपनी बात प्रारंभ करने से पहले धन्यवाद करना चाहता हूं मेक माई ट्रिप फाउंडेशन को और WTCCII को भी, कि उन्होंने आज टूरिज्म एंड ट्रैवल सेक्टर के जुड़े हुए सारे स्टेक होल्डर्स को एक जगह एकत्रित करके, हालांकि उसके लिए धन्यवाद विनीत पंछी जी ने हाथ ऊंचे करके हम सबसे एक दूसरे को दिलवा दिया है, सारे इंडस्ट्री लीडर्स को, एविएशन पार्टनर्स को, ऑब्वियसली पॉलिसी मेकर्स को, टूरिज्म मंत्रालय के सब अधिकारियों को, सारे प्रोफेशनल्स को, और ऐसे लोग मिलकर जो कंप्लीट सस्टेनेबिलिटी का एनवायरनमेंट बिल्डअप कर सकते हैं, उन सबको एक जगह पर ला करके इस विषय पर विचार करने का अवसर प्रदान किया। विश्व भर में भी आज जिस किसी भी प्लेटफॉर्म पर ट्रैवल एंड टूरिज्म के बारे में चर्चा होती है, वहां निश्चित रूप से अब सस्टेनेबिलिटी के फैक्टर पे सब जगह बात होने लगी है। और ये बिल्कुल निश्चित तथ्य है कि इस समय में यदि हम एक दूसरे से सीखते हुए, एक दूसरे के द्वारा लिए गए इनिशिएटिव्स या नवाचार, उन सबको जानते हुए, साझा करते हुए और सॉल्यूशन की अप्रोच के साथ में अगर आगे बढ़ते हैं, एक फ्यूचरिस्टिक अप्रोच के साथ में आगे बढ़ते हैं, तो निश्चित रूप से समस्या का समाधान निकलता है। और माननीय प्रधानमंत्री जी हमेशा इस बात को कहते हैं कि चाहे कितनी भी बड़ी चुनौती क्यों ना हो, उस चुनौती को हराने का जिम्मा यदि समाज अपने कंधे पर उठा ले, तो उस चुनौती को आसानी के साथ में हराया जा सकता है।
Okay, let's move on and get to the IT space, because the IT sector is navigating through the uncertainty of Trump's tariffs, the challenges posted by AI. Now, just recently, I caught up with Arundhati Bhattacharya, who is the president and CEO of Salesforce South Asia, and I began by asking her what her corporate clients are telling her and doing in these uncertain times. Listen in.
This uncertainty is of a different kind, but it's something that the world has faced earlier, in the sense that there was uncertainty during COVID, there was uncertainty during the Ukraine war. This, of course, is a little bit different, but then every uncertainty is uncertain because it's different. So if you ask about what our clients are telling us, there is not something very different from what they were telling us 2 months back. One thing I think business realizes, and that is, in order to take care of the uncertainties in this new world, they need to be more agile and nimble. They need to be more flexible. They need to be more productive and efficient. And if those things are going to be achieved, the main thing that will help them achieve it is technology. In today's world as well, if you've got to survive, if you've got to be sustainable, you have to have the latest technology. So I think companies realize that, and therefore, you know, there is an urgency as to how they get the latest and the best. How they go about it is still a question they're asking, but whether there is a change in sentiment where technology is concerned, I don't think there is.
Okay. I understand that you need to leverage technology to stay competitive, agile, flexible, to deal with this uncertainty. But, you know, companies that we speak to are indicating that they're delaying their investments, decision-making. Even TCS referred to, at least tactically, some projects that they thought would have started have been paused for now. You aren't seeing anything of that sort?
So what we are seeing is clients asking us more questions about the value we bring to the table. Okay? So these could be projects, you know, which would still go ahead if we are able to provide the return on investment, the ROI. So value creation and proving of the value, I think, is very important, along with the fact that, you know, what the project really entails, what will be the actual outcome. So both qualitatively and quantitatively, we need to showcase what is it that will be achieved by doing a particular, you know, project. And if we are able to showcase that, I think clients are still willing to spend.
So tech budgets are still intact? We haven't seen any cuts?
We haven't actually felt any cuts as yet. But you have to understand this is just 2 months old, okay? And there have been a lot of flip-flops during that time itself. So unless and until people understand what will be the exact fallout, at this point of time, it doesn't seem to be impacting it yet.
You spoke about how projects where you are certain of the ROI and the ROI is high are going through. But what about some of the discretionary spending, where the outcome may not be as certain? You know, what we call discretionary demand.
Yeah, but then, you know something, people will do some amount of discretionary spending if they still believe that the outcome will be something that will give them greater value. There are a lot of things that you have to experiment on before you can actually decide that this is the right thing for you. Have they stopped experimenting? I don't think so. Because, you know, it requires you. See, you have to try many things. Sometimes you need to fail in order to have success. But people want to, you know, try fast and fail fast and get up and do the right thing again, okay? So I don't think this is the things that we are trying to do, which is create a unique customer experience. And, you know, we play in the customer experience field. And to create the autonomous agents that will take away most of your very, you know, low-value, stodgy jobs and leave you free to innovate, leave you free to actually get in touch with your customers. Those are not the areas that people really want to cut down on. Because at the end of the day, any organization, no matter what it does, ultimately it's dependent on your customers. And if you're not able to please those customers, if you're not able to address the pain points of the customers, if you're not able to create unique experiences for your customers, then, you know, at the end of the day, what the hell are you doing?
So Salesforce India, as of now, is not impacted, according to you?
No, as of now, we would say no.
Okay, and FY25-26 should be as good as, say, FY24?
So, you know, we've just closed the year. This is a silent period for us. We can't really talk about it. But, yeah, at this point of time, I think things are good.
You spoke about autonomous AI agents, right? That's the future. Are they displacing workers? Because they are able to create very human-centric experiences, customer experiences, personalized. And you also refer to them as low value. So are they displacing tech workers?
So, you know, the thing is, like any other change, what will happen is the nature of jobs will change, okay? If you are looking at people writing very basic code, yeah, there will be a time when agents will be able to do it, okay? But if you're looking at evolving that code into something that really means addresses the issue at hand, you will still need human intervention. I think we have to stop fearing the fact that there will be job losses. There will be job changes. The way we are working today will change. The nature of the jobs will change. Will it mean reskilling? Yes. Will it mean upskilling? Yes. Will it mean, you know, accepting that there is change coming our way? Yes. And what we continue to tell people is, this will probably give you more time to be human, because too much of your time was going into doing routine jobs in the system. Our surveys show that 41% of the time that people spend doing a job is doing repetitive jobs that can just as well be done by agents. Now, if you got back 41% of your time, imagine how much more you could accomplish. Imagine how much more creative you could be. Imagine that you are actually then not getting burnt out, but you are being thoughtful about your job. You are actually connecting with your customer one-on-one, which probably in this today's day and age people are not able to do. So I personally think that this is something that will be a huge enabling, initiative. It will enable people to do much more at a much less time and do it in a far more human way. So in fact, contrary to everybody else, I continue to say that agentic AI will enable humans to be more human. rather than the other way around. So it's not a question of displacing, it's a question of changing.
That's well put. Agentic AI will help humans to be more human. 41% of your potential time could be freed up if agents just do all the repetitive, stodgy work that we do on a daily basis in our jobs. Well, that brings us to a close in Trading Hour. Hope you enjoyed the show. Don't go anywhere. On the other side is Halftime Report.